Thanks for joining us once again. The focus of our dialogue today is Tesla investing in the age of funding for World War III or World War 2.5, depending on how you look at it, and how Tesla's stock price rises nicely without it being solely based on how the company is doing. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're repeat visitor, welcome back. We also want to thank our Patreon supporters. If you'd like some better ideas on better investing and trading, please join us on Patreon. We also, appreciate it when you take time to like and subscribe, or comments are always appreciated. So, as you know, one of the goals of our channel is to improve the quality of your investment. And this show reaches somewhat by Tesla into a broader market look at where we are currently. So there's a question I have for you, and the question is this. Starting in the spring of last year, all the way to the end of last year, there was a big discussion about the fact that the United States was going into a severe recession. Now, the catalysts for this were primarily the fact that the Fed was raising interest rates to stamp out inflation. And sort of that process was causing a lot of layoffs and other things related to those interest rates. So one of the things I'm really fascinated by with investing is there's a certain group of sort of knowledgeable people who are always relied upon for the answer to the question, well, what is actually going to happen? And we know exactly what's going to happen. We're going to tell you. And then 6 months after what they told you with terrific analysis did not happen, there's never any discussion of like, well, what happened and why did you guys get it wrong? And that's what I want to cover today. So I wanted to review the fact that there's a sort of an investment channel that I kind of missed that I think it's really important for you to consider developing a knowledge of. So part A of this discussion is we had a president named Lyndon Baines Johnson in the 60s. As you know, President Kennedy was assassinated, he became president, and then we kind of went from there. So one of the major things that happened under President Johnson was an expansion of the US activity in Vietnam. So what the Pentagon Papers revealed on that whole situation was that there really wasn't any aggression from the Vietnamese north or south that validated a movement into the U.S. investing 50,000 lives and all the money into the Vietnam War. And once the research was done, particularly via the Pentagon Papers, it was concluded that there was an ulterior motive for why there was an interest in actually doing the Vietnam War. And it turns out that one of the major issues that affected that decision was that a whole bunch of folks, including friends of President Johnson, as well as congressional leaders, all started buying or investing in defense stocks. Why? Because they knew that if a whole bunch of money was being spent on those munitions inside of Vietnam, we'd all of a sudden have very large amount of US dollars going into military preparedness in this fashion, and the stocks of those companies would benefit from the growth in sales and profitability. So the question is, how did that go? And the answer is they made a lot of money because the war lasted for several years. They bought a lot of everything, bullets, tanks, the whole nine, and a lot of people died, etc. But there were a lot of folks who made a lot of money because they anticipatorily and during it invested sort of in those war dividends. So the question is, well, why are you bringing this up now? Well, I had a really interesting data point pop up that opened my eyes to something that I thought was really amazing in terms of how you might want to consider readjusting your investment process to include Tesla, but also to look carefully at how the preparation for World War 2.5 or World War 3.0 is actually going to go. So what happened is that there's an article that I read that came out about what's going on in Poland currently. So over the next 3 years, the goal of Poland, particularly relative to tanks, but relative to a large amount of other types of equipment, will actually be working to triple the presence of tanks within Poland. And so by the time they're done with their buying process, this will result in them having sort of more tank capacity in particular, but other equipment that's double that of England and Italy combined. So I read this and I was like, well, like, why are you guys doing this? I actually thought what would happen is that we'd have the Ukrainian war with the Russians. That war would take its course, win or loss for Ukraine, hopefully a win, so we don't have more drama from Russia. And then we would move on from there, and the amount of defense spending would actually drop. The reality is that, yes, there are issues with the funding and equipment rolling into Ukraine as planned from the EU. As you know, there's just a $50 billion allocation made, and they're going to start including more funding for weaponry for them. And it's quite possible the U.S. will soon finish out its increase in funding to this area. So what I learned from this was the fact that one of the problems that's going on in Europe right now is a lot of people now recognize that the plan of Vladimir Putin is to not stop at Ukraine. The plan is to probably retake the Balkans and possibly Poland as well, as part of sort of the recreation of the Soviet Union. So what's happening right now then is you have a large number of countries, even Finland and join the EU. We have Sweden doing its thing. So all of these folks now are working to sort of both build their internal capability to fight the Russian threat, as well as build NATO so it also will be ready for the fight. And so we're in a zone right now where the level of spending is going up dramatically, and until another possibility of the discussion of Russia is, well, what if Vladimir Putin sues for peace and we have some kind of a deal? That's one possibility. Russia wins. Another possibility. Ukraine wins. Another possibility. I think the greatest possibility here is that we end up with, somewhat of a stalemate that we had in the armistice of World War I. But what that means is that it kind of gives Russia an opportunity to sort of rebuild its resources so that it can restart this process, because Putin is not one to enjoy any kind of failure. So the question is, why am I bringing this up? Well, excellent question. The issue right now is that there's almost a testing ground phenomenon going on in Ukraine to determine, hey, wait a second, what equipment is the most effective in Ukraine, and we want to buy large amounts of that. So for example, Lockheed Martin makes HIMARS. If it weren't for HIMARS, I think this would be a done deal. This is going nowhere. So this is one of a number of contractors in the military space that are making money hand over fist right now. And there are others like Raytheon, BAE Systems, the howitzer shells you hear about. There's a whole number of companies sort of in that basket of companies that are benefiting. But they're not just benefiting from the increase of arms that are going to Ukraine. They're benefiting from the fact that all the other countries are recognizing, first identifying what's working best in the Ukrainian theater, and then they're putting in orders, creating huge backlogs for all these companies that basically have monopolies on the solution that they provide. So where are we right now? Well, I believe that we have this new phenomenon happen that I don't think everybody recognizes yet, but I wanted to encourage you to sort of get updated on it. And that is that, so when investing happens, there's a concept that I'll call sectors. So for example, there's a sector called the oil industry. So how impactful is the oil industry? Well, if you look at the market cap of the entire, let's say, Dow Jones, 25% of it is oil and oil services company. So another sector you'd have to consider. So basically, where oil goes up or down can affect the stock market because all the companies within it either are benefiting or not benefiting from where that oil price is. So there are other sort of large sectors that are out there. When you combine all of them, you basically get a market. And so what's going on right now is that there's, I believe, a very strange thing that just happened. So when it comes to defense contractors, they represented between 5 and about 10% of the marketplace prior to our buildup relative to this war. So now we have this phenomenon where the war is happening and you have several well-heeled countries that are now building up their war facilities. And so what that means then is that these defense contractors start making a great deal of money, both from the United States and from other entities that recognize the quality of the equipment, and they are now buying it in as fast as they can get it. Let's put it that way. So one of the strange phenomena that's going on is, I believe, that we've gone from sort of defense contractors being 5, maybe 10% of the market, if you will, to 15 to 20% of the market. So while other sectors may be slowing down, for example, there are a number of tech companies that are laying people off. You have a lot of tech that goes into these military contractors. And so we end up with this phenomenon where there's an entity that's part of the economy that can all of a sudden expand, and it could end up being 20 or 25%, pushing out other entities that previously held a more seminal sort of market control position in terms of its impact. So I think investing has become more difficult than it was 10, 20 years ago. And the main reason is that you have changes in who the dominant players are and how significant they are. Note here, Apple, had the largest market cap in the world. It's now been taken over by Microsoft with AI. Now we have NVIDIA's chips behind the whole AI boom. So you can see how there's a rotation of sectors that end up being dominant. And if they do well or did they do poorly, they big time affect the stock market. Things to consider in your investment process. So I believe the biggest challenge with the military is just finding smaller players like a Raytheon that are doing extremely well, where you can see a more accelerated return than you would with Lockheed Martin, because they're already a huge company. So they'll make money, they'll keep growing, but they may not have the blowout numbers that you might see where a very, very small tech company becomes huge. So I therefore believe that the other thing that's going on here, with the military sector doing that well and the number of different industries that benefit from that, think of tires for those trucks, think of chips for all the electronic equipment that's being produced. They not only are doing well, but they're boosting up other industries that spread left and right. They definitely have to have oil and gas to fuel these vehicles, though I think that's more being sourced in Europe. The point is that this war activity has the impact of representing a boost to the economic engine of the globe as it's going on. So I therefore believe that it's really worth your time to check this out, because if we have everybody building up their war capability consistent with what happened during World War II, that's a lot of money being spent and a lot of opportunity to make money from investing there. So the one other thing that I saw yesterday that I wanted you to be aware of is something I want to call the rising boat phenomenon. So one of the ideas that I wanted to present here is the fact that you have this phenomenon going on where Tesla dropped basically $180 after these somewhat poor earnings. And it's now started to rise again. Now, how, sort of what happens with that party, if you will? Well, the thing that's starting to happen is something called PE expansion. So, as you know, the price earnings ratio of a company is the growth rate times the amount of earnings will tell you its price earnings ratio. And what's starting to happen, but I expect to start happening more as we head into the summer, is this sort of, I have to call it a weird form of price expansion in terms of growth of stock prices. So what that weird phenomenon is the fact that, let's say you have company X. We're thinking, in this case, we're thinking about, we could think about Google, but I'm more thinking about, Microsoft, and it's just been killing it right now in terms of what they're up to. But, kind of, let's say the Apple, Microsoft zone. Well, what happens is, if you're not just investing by index, the non-index investors and individuals are causing the stock price to rise. And to some extent, in order to even buy into it, you have to sort of buy ahead of the PE. So because everybody's piling into certain stocks legitimately, you all of a sudden have a problem that pops up where the PE ratio exceeds what the growth rate and earnings are for the company. It's just the price you have to pay to get in if you've waited this long. So, well, the question is, what happens then? Well, the answer is, let's say the price earnings ratio of the company is 15, and a lot of people are paying 20 for it right now because they have money to invest. They know the companies are good and they're good for growing over time. They'll start saying, well, we do want to buy that, but it's kind of expensive right now. Why don't we turn around and look at companies that aren't growing as fast, but their PE ratios are a lot cheaper than the companies that have been priced very highly. For example, Tesla. So I believe what Tesla is going to benefit from is this phenomenon of a lot of money managers who have to put money to work, but they can't put money to work in places, in essence, that have been overpriced by everyone going there. And so what starts to happen is everybody starts looking around for, where can we go right now to get decent returns and growth, and that everybody isn't already there? And the answer to that is places like Tesla. Hence, I believe you should not be surprised to see Tesla experience a nice 10 to 20% rise in the near term, in the next 2 or 3 months. And there may be stocks related to your specific industry that are also sort of on that track. So I therefore wanted to do this show because I just think that this is your chance to get rich off of World War III. And it can be in a direct process, or it can be indirect in that the PE ratios sort of wash over everybody, where all the boats start to rise relative to rising PEs. Not that those companies are justified at the higher growth rate. It's just that they're cheaper than everything else out there. So I think this is really interesting because it's an opportunity to make good money on very large companies that are doing extremely well, that have particularly in the defense sector, that have a really nice trajectory over the next 3 to 5 years, because the orders that are being placed are for rearming in a significant way all over Europe and all over the globe. I mean, Australia has money to spend, Japan has money to spend relative to China, same thing for Taiwan. So there's a lot of money that's being allocated and spent to make these countries ready for what is going to happen in the new world order. So we really look forward to your comments on this. I think you should join LBJ and invest in a little bit of your portfolio in the growth of these defense stocks. And next we move on to our health tips. Just a reminder, a 20-minute walk daily is highly recommended by one of our doctor advisors. Number 2, try the 3 days a week only for meat in your diet, and give your kidneys a break in the process of the diet switch up. I think you'll be impressed. One item I wanted to encourage you to think about is if you go to, I just went to Costco, but you can go anywhere and get avocados. Very healthy, very filling. I just had avocado toast. So I'm in this process right now. I'm trying to learn, what do you put on your diet if you don't have meat, on a regular basis with your meals? And I'm thinking that that might be something to consider adding to your diet that might be very helpful. So I also, just a reminder, um, you know, I think that there's something called circadian rhythms. So you might want to consider how you're sleeping. So every 2 weeks, try to maintain a schedule where you go to bed and wake up on the same schedule every week, and see how that works for you. Because I think you'll enjoy the circadian rhythm management experience. Will be both healthy and very helpful to your overall health process. So at any rate, wanted to thank you once again for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lahit road, hoda hafez, draisite ni hama, kumbawa, heido, namaste, Hindi. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.